Hey guys, Kill Stokes here. Welcome back to a quick trading video. I want to take a look at silver and a very interesting opportunities that exist on this metal. Now, in my last Trading Edge video, we talked about the crash on gold and silver, mainly due to the perfect storm of different events. There's a little bit of profit taking in there. In general, there's the stronger US dollar, and part of that is prompted by the new Fed chair appointee. And what I want to take a look at today, and I should say we have more news coming out. Friday, we have our non-farm payroll, and then I think Friday we have supposedly the US and Iran talk, so those are going to have an impact on the market as well. But from a technical perspective, if you are someone who is looking to take advantage of a cheaper price on gold and silver, specifically on silver in this instance, we have a really good opportunity. So you can see price action pretty much nosedived from about $1.20 or $120, excuse me, all the way down to about $70, where we found a previous level of structure support. And we got some pretty interesting clues at that level, right? The first clue was price action diving down on this very aggressive candle and leaving us this long wick to the downside. Now, that long wick to the downside means that at one point the sellers did push price action all the way down to this level, but then it was rejected, showing us a little bit of buying pressure. Now, that buying pressure could be a combination of sellers just not being interested at that price anymore because it's because of the price. It could also be buyers being interested because it's a much cheaper level and they see this as a bargain. Doesn't really matter why that is. The point is that price did respond at that level. We then had what's called a doji candle, this next candle in the middle, which is an indecision candle. So the market went a little bit up, it went a little bit down, and kind of like a stalemate in a tug of war. We then tried to retrace off that level a little bit, never putting in a higher high, higher close, before today retracing and testing these lows. Now, if the day, which is still about 5 and some whatever hours away, if the daily candle is able to close without breaking and closing below this lowest low right here, that's going to give us a classic price pattern called a double bottom, which is basically a secondary test at breaking a level of structure, which we ultimately expect to fail. Now, if we go down to the 4-hour time frame, we have the same thing, or a clearer picture of the same thing, but it has already occurred if you were looking for a reason for entry. Again, price action dove down from 120 plus down to about 71s. We tried to make a little bit of a bounce up here. We failed and we came back down to retest those lows. Now, here on the 4-hour, we have a little bit more information that we can use as well. Not only do we have the RSI, my relative strength index down here, going massively oversold. In general, your default indicator settings say that price is oversold once it passed 70 to the 70 line. My red line right here, oversold should be at the 30 line. I have my things flipped upside down. My oversold, I look for extreme conditions, is down here at the 20 line. So you can see that we passed that in a big way as well, going all the way to 8. So needless to say, this was really oversold. More importantly, as we retest this level, so the same level that we went oversold to start with, you can see that our RSI comes nowhere near that prior low. And this is going to be something called RSI Divergence, where price action is doing something different than your indicator. And these are little clues that a reversal may be happening. So if you are someone who is looking to get long this pair, I think this is the excellent opportunity right here. Stop losses just have to go below the low. So let's say you entered at the completion of the double bottom right here. Stop losses are going to be below the lows here, and targets could be at a retest of the highs, or of course anywhere in between. But you can see the massive amount of risk reward that is there. Now, with that being said, I told you, Friday, we have two things coming out. We have non-farm payrolls for the US dollar, which is an event that's going to be paid attention to by the market. We have US-Iran war talks supposedly happening on Friday as well, or over the weekend, which is also something that the market is going to pay attention to. So if you're a little bit concerned by that and you're not ready to get involved yet and you want some extra proof, there is a secondary opportunity that you can use to get involved, and it's something we call the 2618 trade. So what you want to wait for is, one, a violation of the highs of this double top peak. right? Or double bottom peak. Sorry, I'm running around and I'm all backwards today, but we want a violation above this level. So a break and a close above. Step 1. 2, we want to see a retracement. Where do we want to see that retracement come back to? Well, ideally, we want to see that retracement come back into a 618 Fibonacci retracement. So if I take my Fibonacci tool from my swing low to wherever my swing high ends up, I want to see that retracement come back down into the 618 Fibonacci retracement zone. And then that's where you're looking to buy back up, either for a retest of the highs and or for the extension higher. So a few ideas on silver for you. I guess one idea, but one for the more aggressive trader, one for the more conservative trader. Please like the video if you think it was valuable and informative. And if you have any questions or comments, feel free to leave them below. As always, this weekend, I'll be back with the bigger video where I share with you all the trading ideas that are on my radar for the week ahead. But until then, enjoy all the other random content that I upload on this channel. All right, till next time, plan your trade, trade your plan. Take care.